Right, welcome to it's the first video on this channel and God knows how long. It's been a while since I was posting back when I was unprofitable. Today, I'm introducing something called the second stage model. This is just the introduction. We're going to go through a couple of trades I've done with the second stage model and also a PowerPoint on explaining what the second stage model actually is. The second stage model, for me, from my back testing and live trading and forward testing, is my highest probability win rate model within NASDAQ or any sort of futures you want to trade. It's pretty much letting 9:30 when the market opens just cause the liquidity sweeps. Yes, obviously 9:30 can distribute, but we can still get in line after the distribution. We don't miss the whole move, which a trade I will go through, which I took yesterday. So it's just letting the price take out the buy stops, take out the sell stops at 9:30, letting price do its thing, and then us catching the wave after that once price clears up and we have a clear directional bias within the market. So let's jump straight in. What is the second stage model? The second stage model is a structured intraday strategy designed to capture the second leg of institutional delivery after the 9:30 NY open. So let me just have a bit of water. It uses higher time frame bias, daily hour 4 and hour 1, intermarket SMT, and precise 10 a.m. to 11:30 a.m. expansion window to identify high probability continuation setups with risk. And this is a saying I love that I did create. It just makes perfect sense for this model. Let 9:30 be the earthquake and we'll catch the tsunami. Why 10 a.m. to 11:30? This window represents the second stage of intraday delivery. The 9:30 a.m. NY open is the initial earthquake, the volatility, liquidity sweeps, and engineered moves designed to set up the true direction. 10 a.m. to 11:30 a.m. is when institutional order flow typically steps in, driving the expansion leg of the session and the day. Aligning trades with higher time frame bias during this period allows for high probability direction setups with cleaner structure. The window consistently produces the cleanest expansions, avoiding the 9:30 chop and late session fade. The second stage model is built on a structured time-based approach to capture the continuation leg of intraday price delivery. The daily bias and hour 4 anchor, it establishes the directional context using the daily draw and the previous hour 4 candle as a short-term anchor. SMT, it helps us confirm there's manipulation within the market. The 10 a.m. to 11:30 a.m. window, that's our execution window. It focuses on the second stage of delivery, avoiding 9:30 volatility and late session fades. The SMT plus CISD entry sequence utilizes divergence and a clear shift in delivery on lower time frames for precise entries with tight risk with protected lows. Now, you may be a little bit lost, but that's okay. We're going to go through 3 or 4 trades that I've taken in the last week or two, all been winners, using everything that I'm explaining here. So we'll start here on the hourly. Here we have equal highs at all-time highs, and we know how bullish NQ is at the minute, so automatically that is my eye. That is what I'm assuming price is going to target, especially with it being on a Thursday, and we can expect Thursday to drive the majority of the weekly expansion higher. So now we need to see higher time frame SMT. Well, we do have it with YM here. Let me just get it up. We have it exactly here. So you can see here, we make a lower low. Let me zoom in a little bit more. And with YM, we make a higher high. So that is an indication, whilst YM's respecting this bullish daily gap, that we are going to see higher PA. So then we drop to the hourly before 9:30 and we price things out. We look at what price is going to do. As you can see here, this is the 9:30 move, big expansion. So you may be thinking, well, I waited to 10 a.m. so I've missed a move. That is completely wrong. But let's break it down a little bit more before we go into the actual trade. So we need to see SMT divergence on the higher time frame and the lower time frame. Yes, we have it here. But is it enough for us to assume that price is going to continue higher up into these highs. No, I want to see higher time frame SMT on the hour 1 or the hour 4. So here we have it on the hour 1. We have SMT here again with YM. We make a lower low here, and we make a higher high here. Also, I always like to play a range. So on the hour 1 range, we have a low here that's connected to this high here. So this was my original target, but obviously 930 exploded through that, so we had to work more towards these targets. So 930 closes, there's a new 4-hour candle, and this is how we've closed. We've disrespected majority of this gap. We have equal highs above here. We have SMT on the daily. We have SMT on the hour 4, on the hour 1. So now we just need to wait for the on an intraday basis for it to show us our setup. And this is where we look for, again, a lower time frame SMT and a change in the state of delivery. So now let's drop to the M5. So people would see this and think, I've missed the move. How do I get involved here? It's very, very simple if you follow these simple steps, because it's very, very, very consistent. So let me mark out 10 a.m. so we're aware of where it is. There we go. What we want to see when we have a big expansion is some sort of open low high close of the new hour 4 candle, and then we want to see a change in the state of delivery with SMT divergence. If we continue expanding higher from 10 a.m. after this expansion, I'm not going to get a line, because it's giving me nothing to frame anything off. So we open 10 a.m. we go lower, go higher, go lower, and I think we go higher here. Yeah. And then we have this big bullish candle indicating higher prices. Now let's go on to YM on the M5. Right, so this is the YM's price action at the time. If you look at this chart and this chart, it all links up with the crosshair. You can see here on YM, when it's gone lower here, it's taken out numerous lows. And it's much bigger on the M15, but let's just go back to the M5. It's just too long to replay and show. We can see here we've taken numerous lows. Here, we've kind of stayed bullish, we've kind of stayed strong. This has created what? A lower time frame SMT divergence. Let's just mark it off so we get a bit of a gist. We can literally mark it anywhere on here because there's that much SMT. We'll do it here. Lower time frame SMT divergence. We also have another SMT divergence at these lows here, making this a 2-stage SMT divergence. Therefore, giving me a very clear and strong bias that we are going to go higher. Now, this is the day before NFP. So price, especially after an expansion, I did expect for it to get somewhat choppy. So I did only take a 1.5R on this trade. Well, 1.5%, but that's completely okay. What I did, once this candle closed, I longed here, because we've had the change in the state of delivery by closing above this candle here. And what I said, I would also long if we went back down to here. So I opened a smaller position here, and I would add the rest of my position onto here if we go back down. This is simply because if we then just exploded higher and we give no retracement, at least then I was involved. Yes, it does kind of wreck your risk to reward a little bit. But I was trading the eval because it was a day before CPI. I was only interested in trading my eval. I'm not trading my funded because, as I said, I can expect price to get very choppy. What we did, the next candle went a little bit lower, and then we tagged in our next entry here, where we added more risk to the trade. So now I'm expecting price to go higher. Now, what you'll see is, to be honest with you, some choppy ass PA. And I was actually quite lucky here, because after here, I did shave my stop loss to literally about there. And luckily enough, it didn't stop us out. And then it went higher. And we managed to we grabbed about a 1.5 altogether percentage, because I was at the gym. It was day before CPI. I wasn't interested in holding onto the trade. But as you can see, the lower time frame SMT changing the state of delivery after 10 a.m. with a higher time frame SMT with a clear drawn liquidity on the higher time frame. This is how you catch the 10 a.m. moves. And it's a bit different when we don't have an expansion at 9:30. We play it a little bit different. We don't necessarily need to see the open, low, high, close delivery on the hour 4 candle. We just need to see the lower time frame SMT, the higher time SMT, and the change in the state of delivery. We're going to go through another trade now. Now, this is a long I'm actually going to be going through, which might surprise you because we've taken the previous day high on NQ. So why am I still looking to long? The reason I'm looking to long is because YM actually had taken London lows and Asia lows, which again created this SMT here with NQ. I can't replay it on YM for some reason, but we just had SMT like this. Okay, so from my time in the charts, when one asset takes Asia lows and the others don't, we usually displace to the other side, and this is what I was thinking going into 10 a.m. Again, we always wait for 10 a.m. because we wait for the chop to pass. If we go into the lower time frame on NQ, imagine if you got in here on the change in the state of delivery here, chopped out. You know, if you got in here, it might not necessarily been chopped out, but it's just horrible PA to be involved in. Let's fast forward it a little bit to we're still waiting at this point. And then we've had a sweep of this low. If you understand the IPDA market cycle, you understand we cannot reverse from a consolidation without a sweep. So once we had this sweep, I was anticipating for us to go higher in price, but we still need to get that lower time frame SMT. So where is it? The lower time frame SMT I refer to within this trade was here. It is not directly at the lows, which it doesn't need to be. Yes, it is more preferable, 100%, but it doesn't directly need to be exactly at these lows. Okay, so once we had this bullish candle, again, look, 10 a.m. open low, high, close. That's what I'm assuming when I see this candle form, because it's a new hourly 4 candle. We can use the previous hour's 4 candle as an anchor. If the previous hour 4 candle was bullish and we're bullish, we can use that to frame our next hourly 4 candle. However, the previous hour 4 candle was a bit messy, so we then have to use our initiative. Are we bullish? Yes. Okay, so we're still looking for longs. What do we need to see if we want a bullish hour 4 candle? We want to see open, low, high, close delivery. We want to see SMT in line with our draw, and this is what we've got. We had Asia take lows, and we had lower time frame SMT here. We've now had the change in the state of delivery, showing that we are now wanting higher price action. So what do? Let's see this. I aim for a 2-to-1. And we get it. Should get the tag here. Oh, no, it was the next one, I think. There we go. We've got the tag there. Little to no drawdown. A perfect trade. Lower time frame SMT, higher time frame SMT, change in the state of delivery after 10 a.m. enter 2-to-1. There's another setup. There's another win. Okay, now we're going to look at a gold setup. I am just using XAU USD because I always trade on my Top Step X actual platform. So we actually did here tap into this hour 4 gap on the futures and create SMT with silver here. So there is our higher time frame SMT, and we're also in a bullish PD array with it being in this hour 4 candle. With this close here, if we want higher PA, we want this candle to go higher because that creates a swing low, therefore creating bullish PA. So what do we do here? Again, we wait for 10 a.m. Every single time we wait for 10 a.m. We'll drop to the M15. We actually also had SMT divergence here with silver. Again, creating a lower time frame SMT, so we could, got involved. Well, we couldn't have got involved anywhere here unless you wanted to get involved in this inverse FVG. You could have put your stop below there because an SMT divergence makes swing lows or swing highs protected. Price should not go to that area if we are correct with our bias, if we have SMT divergence. But we waited to 10 a.m. Let me mark it out once again. 10 a.m. here. And we drop to the M5. And what we're doing here is waiting for price to show us we want higher PA. And we got it here. What we had here was SMT divergence, again, with silver. So again, we're in a bullish PD array, create SMT divergence. Then we had a change in the state of delivery. So where does our entry go? Here. Where does our stop loss go? At the protected lows of SMT. Here. What do we aim for? 2 to 1. And we go tagged in here. And I do remember it being a bit of a choppy day because we had late news, but we eventually got our 2 to 1. And that is exactly how you want to play the second stage model. And if you look at it, it's a very, very clean market maker model. Now, I'm going to be showing more trades that I take within the future. And I wanted to show a gold example to show that this isn't just, NASDAQ, ES. This is also, you can trade gold. I've not traded on Forex, but I'm assuming I can't see the reasons why you can't. Obviously, the hour 4 candle closes at 9 a.m. for Forex. So keep that in mind. So your settles will want to come after 9 a.m., not 10 a.m. But go ahead, back test this, see what you can find. And yeah, please subscribe if you're interested in learning more. Please follow my Twitter. The links are going to be in the description. It's also on my channel too. And take care.